Testing. Can everyone hear me clearly? Hey Kelvin, hey Peter. Nice to see you guys tune in. I'm just gonna give it a minute for the rest of us to stream in. Right. In the meantime, what we usually do is we prepare, we prepare rather, we prepare YouTube IC markets. We prepare to review what we caught last week. All right, good stuff. Christy, nice to see you too. Leandro, nice to see you. I'm glad you found the analysis useful, the style that we teach useful, right? It must be night where you are. Yeah, David, it's going to be a crazy, crazy week, right? I mean, there's so much that just happened, which I think it costs a lot of crazy stuff through a week. I mean, Silicon Valley Bank closing down, Silvergate. I mean, the crypto side, already seeing crazy movements, right? So this week, it's going to be a crazy week. I have this last week to hit my to hit the last few percentage target for my funded trader test. Right, so yeah, it's gonna be a crazy week, man. I kind of neglected that for a while, so I'm back at it. So hopefully I can close everything up this week. Let's see. This was last week, all right. So we're gonna review later on. I'm gonna review some of the calls that we did. I think we did make a couple of really, really nice calls, right? This is me reviewing myself, so it was a little bit of an inception of me reviewing myself. It's pretty fun. Okay, all right. Marondera, nice to see you. Lozano, nice to see you too, man. Right, I think my hit rate, say it's about 80% from last week, right? Managed to get quite a number of it right, right? So that's a nice thing. Okay, Mando, nice to see you too, right? Welcome. Right, nice to see you guys tune in nice and early, right? It's a pre-market analysis. Really look at some of the key news events, right? So we spent the first part just be highlighting a couple of the key news events for you guys, right? And later on, we'll dive into the technical setups. We basically go through all the majors, indices, gold, oil, and if you have time, we take a couple of questions. And hopefully today we don't have any troublemakers. We've been proven wrong for twice in a row. Okay, now let's see. FX Bank, right? Nice to see you here, man. FX Bank, right? Ahmad Jamil, nice to see you. Good evening, Sumi. Yes, Manish, we'll probably have a time to take a look at gold later. We always look at gold, right? We got Munabahi from Pakistan. Nice to see you. Right, the real hair looks, right? Familiar name. Nice to see you too. Right, and Joel Brown. Nice to see you. Right. As always, feel free to let me know where you guys are tuning in from. It's always nice to see where everyone's tuning in from, because the pre-market analysis is 9 p.m. GMT. So it's actually very suited for people who are in the London. Yeah, London should be right 9 p.m. Right after dinner, right? It's a great time to just sit back and chill, right? Assuming the missus allows you to, right? It's like, sit back and chill, right? If you're in Europe, it should be about like 10 or 11. If you're in Sydney, right, it should be about 8 a.m. Good timing for you. I'm in Singapore. It's 5 a.m. So it's a pretty intense timing, yeah. Right. Oh, okay. Nice. I got some people from US. Right. Yeah. This week should be good for us. It's always good for us. Right. We know how to trade it well. And we do well. Yeah. David always enjoying his a really, really good time zone in US. Right. Solomon, nice to see you. Right. Okay. People from Nigeria, and we got Armar Jamil from Italy. All right. Good stuff. Let's begin today's session, guys. All right. So as usual, remember. This disclaimer, everything in this webinar is educational in nature, so nothing should be construed as investment or trading advice. Please do your own little due diligence before you guys trade, all right? Now, For those of you guys who are here for the first time, or rather, I'm going to share with you the agenda. We're going to do a key touch on a couple of key news events from Forex Factory, right? And after that, we have analysis on majors, but we will also review some of the calls that we make, because there's the high level of accountability that we set ourselves to, right? A really high level of accountability, right? So that we can see what we did from the previous week, how it's working out, right? The 1 day time frame, like this analysis today, we're going to focus on the D1 time frame, right? So it's usually what's going to happen for the rest of the week, right? If you join me roughly 12 hours from now, right, it'll be the H4 and H1 time frame, live trading strategy. You'll be a little bit more focused on the smaller time frames, right? And yeah, that's happening in about 12 hours. I can send you guys a link for that in a bit. All right. Okay, you got people from Cape Verde. Ready? I can't pronounce it. They get it right. Okay, Nigeria, South Africa. All right, good stuff. Hey, Yasser, nice to see you too, man. Okay, so let's begin today's session. All right. For those of you guys who do not know me, I'll just spend a quick 1 minute introducing myself. Right. This is me, Desmond. Right. So I run the award-winning research firm, Everest Fortune Group, also the Forex Army. Finalists for 2019, 2020, and 2021 for Best FX and Best Equity Research. So usually I work with major financial institutions, telling them where the markets are heading. But with a special partnership with IC Markets, we are bringing guys the good stuff, the juicy stuff, the stuff that take our trading to the next level. Okay? So yeah, it's if there's any word of encouragement I'll share with you guys is that you don't need to be 30 years in the industry, 30 years in Bloomberg to be a good trader. You just need 30 days learning the right stuff. And here at IC Markets are dedicated to really bring you that good stuff. All right. Couple of important links I just want to point you guys to if you're here at IC Markets, right? Firstly, we have a live we got a live where is it? We have an upcoming one. Scheduled for here. Okay, this I need to copy the link in the address. I'm gonna send it to you guys. Join me, right? Yeah, join me in roughly 12 hours, right? So it's a live trading session. It's a little bit different from the pre-market analysis, right? We jump into the H1, jump into the H4 time frame, a little bit more intense, right? Yeah, so go check it out, right? I'll be doing an event that I'm the one who is hosting it, so it'll be a follow-up on today's pre-market. I'll show you how to look at D1 and jump to H4 and jump to H1. All right, and of course, trading analysis, right? This is if you want to learn, not this trading analysis, rather IC Markets webinars here. You want to learn how to be a better trader, come to here and watch this playlist. All right, now let's touch on a couple of things, right? The this part over here. Okay, what I want to encourage you guys is that the moment you have questions, feel free to ask, right? Yeah, I'll do my best to get back to you guys as soon as possible, right? I need to tweak the timing for here if it's possible. Yeah, it's correct, right? This should be, this timing should be GMT +8. Yes, correct. So it's more synced to my time, so I know what's happening. Okay, all right. So Monday, there's no real big news event on Monday, but I think people should take note about there'll be a lot of talk about Silvergate and the SVB, Silicon Valley Bank collapse, and of course the possible contagion. For those of you guys who are here and kind of want to know what happened, right? I think you might have seen it. You might have seen crypto recently. I think if you go and look at crypto, the way Bitcoin shot down come up. By the way, this is one of the key calls of the week. Right, the way it dropped so hard and why it's bouncing is largely because of these two news events, Silvergate and the Silicon Valley Bank collapse. The main cause of it, in case anyone asks you, right, and there's let's talk about it throughout the week, right. The main cause of the collapse is that they have you must know that these guys have a lot of cash to invest, so they invested in a lot of like debt securities, and this yields about 1 to 2%. Right, since currently the interest rates have increased about 4 or 5%, so the value of their bonds has declined dramatically. Okay, this is actually still all good and fine, since the capital will be returned in full upon maturity. That's how, think about it. That's how debt securities work, right? Once you reach maturity, you get it back. But the problem, was when the people who put money with them wanted their money back following the FTX collapse. So do you remember, guys, the FTX collapse, right? A lot of that kind of shook up the industry a bit, right? Think about it. Silvergate is a crypto-focused bank. Silicon Valley Bank is more venture capital focused. But because of that, people, the cost of especially Silicon Valley Bank closing down was because of the bank run. People are losing confidence in it, and a lot of people are running for it, trying to withdraw their cash, and then of course, imagine you're holding all these security bonds, right, and that debt securities, and by right, you're supposed to leave it there, let it to mature, right, and then they can get the money back, right? But then if everyone wants money, you need to take that debt securities, you need to sell it off at a massive loss, right? And when you sell it off at a massive loss, that is where they not only take a loss, right, but of course the bank run, there are people are pulling all the money out, and that's also one of the reasons why Silicon Valley Bank closed down. So if anyone asks you throughout the week, all right, this would be one of the, at least you have a little bit of context there on one of the big news events that will kind of be overshadowing. You see on a lot of news websites and stuff, especially if you follow crypto very closely, right? So this is definitely one thing to look out for, okay? Now, the key news events which I personally think that you should take a look out for, okay? Tuesday, this is of course Singapore time, right? But you need to take note of claimant count change. This affects the GBP. Okay. Basically, you might be thinking, what does claimant count change have to do? Right. Previously it was minus 12.9k. Now the current forecast is 12.5k. Right. So the increase in forecasted unemployment benefit claims may negatively impact this, the pound specifically, right? As it signals a weaker economy and lower consumer spending. All right, so you just think about it, right? If more people, right, need unemployment benefits, and basically impact the pound, you should expect the pound to weaken. All right, the other key one to take note of, right? I'm just pointing out the key news events you should really focus, right? The USD, there are three things that's going to affect it, right? CPI month year on year, and the cost CPI. All right, so you just need to take note, right? Of course, you can see the previous and the forecasted over here. Okay, this basically just measures consumer price increases. So if in line with the expectations, it will actually negatively impact the US dollar, as the Fed, we all know the Fed will be seen as less inclined to really raise interest rate at the current 50 basis points, and instead opt for the less aggressive 25 basis points increase at the next meeting, right? So basically, if the release, right, if the actual amount was pretty much similar to the forecasted amount, we can expect the USD to weaken. All right. Now, the next key thing that I want to point out is Wednesday, where are we? Annual budget released by the GBP, right? Affects the GBP currency, right? This basically is a document that outlines a government budget, right? So it includes spending, it includes income, borrowing levels, financial goals, all that kind of stuff. It's like this massive document, right? So increased spending, actually generates work for contractors, while borrowing levels, impact the nation's credit rating, and kind of provide insight into the nation's underlying fiscal position, right? So you just need to take a note of this key thing. So it's hard for us. You notice that there's no previous, there's no forecast, there's no actual, right? Because it's not value that you're looking out for, right? It's really not value that you're looking out for. It's a document that's released and people read and assess the document, okay? Really important news event for us to take a look at, right? Is of course over here, right? And just highlighted a whole bunch of them all the way down to retail sales, right? Core PPI, right? Retail sales, right? There's, let's see. Yeah, actually, if I were to highlight this few, Empire State Manufacturing Index is also important, right? Why all these things are important is because, what's the word for it? The PPI figures are expected to be higher, right? If I'm not wrong, it's expected to be higher. right, than the previous releases, which could lead to an increase in inflationary pressures, right? This could cause the USD to strengthen, and it kind of reaffirms price pressures, kind of not abated, right? Let me highlight a few more things for you. I don't want to spend too much time on this. AUD, unemployment change, super duper important. Okay, let me see, where is it? Yeah, EUR, main refinancing rate. Okay, it's expected to increase, right? It's expected to increase here, and that's the key thing. It's expected to increase from 3 to 3.5%, right? So any maintenance of the hawkish tone from the ECB, right, in the monetary policy statement and press conference could lead to further rise potential, increase, in the value of the euro, right? As higher interest rates can make the currency more attractive to investors seeking higher yields, all right? At least this is what I have listed down my notes over here. So please take note of these two things. They go hand in hand, okay? Last one, of course, is this thing over here, is the preliminary consumer sentiment report, this part over here, okay? Now, I do want to, let me just make sure that I have you guys over here. You ought to lose money, not my words. All right, troll stream. All right, I guess. All right, let's begin today's session. All right, so let me go here. All right, anyone have any questions? Okay, now let's review what we did previously and what we did now. Let's review last week's forecast and this week's. And when I review last week's forecast and this week's, that is where I will what's the word for it? I will also let you know the forecast for this week. All right, we got Troll Stream saying that only 3% of traders are successful, and I'm sure the 3% is gathered here. All right, so yeah, at IC Markets, we bring guys good stuff, juicy stuff, right? We're not tied down to some statistic you find online, right? But yeah, in trading, it's not easy to be a successful trader. Okay, it's not easy to be a successful trader. There are a lot of, it's very different from the world of academia, as I like to tell you guys, right? When it comes to trading, it's not just, what I say is not similar to the world of academia, right? Is that people, when they trade, right, they tend to think it's very similar to studying in the past, right? The more they study, the better they do, okay? Yeah, think about it. The more you study, the better you do, right? If you don't study, you don't do well, right? But in trading, it's very different, right? It doesn't mean that the more you study, the better you do, right? The more indicators you read about, the better you do, right? The more fundamental news reports you read, the better you do. That's not the case, right? It's always, you can read a lot of reports, or you can read a lot about indicators, but if you apply them wrongly, you end up losing money too, okay? And it's not only do you apply them wrongly, but you can apply them correctly, but you have the wrong combination of them. That is where you lose money too, right? So it's like if you were to analyze, if you learn and if you trade focusing too much on oscillators, for example, you might end up losing money. Okay, that means you trade the markets, you throw on the RSI, you throw on a stochastic, you throw on MACD, you throw on all those indicators which are talk about overbought and oversold areas, right? And then you become too reliant, too narrow viewed on a certain strategy, right? And that can cause you to lose money too, right? Although you did apply all of them correctly, but you applied the wrong combination of them. Okay. Now, hey Ali, nice to see you tuning in, right? I'm doing well. I'm kind of losing my voice a bit, so this is like some redoxon or something, like. Yeah, they're losing my voice a bit, right? Maybe I'm screaming at Manchester United playing so terribly, right? Losing my voice a bit. So I mean, we this was the view for DXY. We are calling for a reversal below 105.97. Calling for a view below 105.97. The view that we have for this week, there we go over here, right? So you can see what we forecasted last week for price to kind of reverse. Where am I? Yeah, we forecasted for price to reverse, and price really has been reversing pretty nice, right? Okay, John, I'll leave that to the team to reply, all right? But I think the market opens in a bit, right? Market opens in about 40 minutes, if I'm not wrong. All right, so do check it out. All right, but yeah, so we are forecasting a reversal for RC markets. No, for DXY last week, right? So it has reversed quite nicely. We do expect it to reverse a little bit more. I'm not going to use the Ichimoku cloud that much now, but what is interesting is that why did we call a reversal from here? Because it was a 38% Fibonacci retracement. It was a very nice overlap resistance over here. So it has reversed, right? And is continuing to reverse. So for the rest of the week, we still expect DXY kind of weakness, expect prices to go down. Okay, now let's see what's the next one we forecasted after. Again, remind me, guys. I forgot to timestamp this, right? I was saying that I would just timestamp it so it'd be easier for me to kind of go through, right? But yeah, I kind of forgot to timestamp it, right? So the next key thing that we're looking at, so we reviewed DXY. Over here, euro dollar, right? We're forecasting for euro dollar to rise up, right? With intermediate resistance at 0.787. Okay, we're back at there, and yes, it has made that little bounce. It has bounced 0.787. It didn't really react off the intermediate resistance that we highlighted yet, right? But I do want to let you guys know, right? I do want to let you guys know that where is it over here? What is worth looking at? Where is my indicators? Sorry, indicators. RSI. Right, there's something new that a new element is forming, right? So notice what I like about this is divergence. Where's my divergence line? Okay, my divergence line is not here. Okay, I'm gonna put it green, right? Because it's a bullish divergence, right? As you can see over here, this is a very, very important signal for me, okay? Because price was making lower lows, but the RSI was making higher lows, right? Anyone curious what RSI I'm using now? I'm using 14. You can tweak it to 21 too. 21. All right, on 21 you also notice that there's the RSI is going upwards. Okay, so when this is bullish divergence, okay, this is bullish divergence happening at a key support level, right? Nice little ascending trend line support, as you can see over here. Right, nice little bit of Ichimoku. It seems like it kind of just failed to break out the Ichimoku. But what I like about this is that we should be able to see a rise at least for the rest of the week. Right, what we're really expecting is for price to continue to rise up here. I will still highlight this level as my key intermediate resistance. Okay, intermediate resistance. There you go. Right, so this method of analysis, right, gives us a little bit more time to take a couple of requests, because we're actually just reviewing what we did previously. If it changed, if the view has changed a lot, then we need to change it. If the view hasn't changed, then we update it, right? So this still remains our key intermediate resistance level. Okay, PZ. We take a look at Nasdaq in a bit, right? It's all the way down here, right, in the list of analysis, sequential analysis that we're looking at. Okay, now okay, so euro dollar, we still expect prices to rise. Take note, there is the risk, okay, because I'm looking at the price action over here. There is a risk that we might see price come down one more time before bouncing up. But if we were sorry, where's the thing here? Remember about correlation, right? If you're expecting a drop on DXY, what usually happens is you're expecting a bounce on euro dollar, right? Yeah, Timo, right? I agree with you 100%. 100%. If only we did, but yeah, not yet. As far as no, not yet. All right, but yeah, it'd be a dream. Okay, euro dollar, right? So take note, guys. Why do I look at euro dollar right after I look at DXY? It's because they are negatively correlated. All right, you can see when one goes up, the other goes down. When one goes down, right, the other goes up over here. They're negatively correlated. So if dollar index is dropping, right, then that actually means that we should expect euro dollar to rise. Okay, so that's the key thing here, right? When you're analyzing the markets, it's important to use correlation to help you better to help you better gauge where the markets are going. Because if in this case, right, dollar index is dropping so nicely, right, dollar index is dropping so nicely, and then we expect euro dollar to bounce nicely. So this is what I call that the markets are in sync, right? That means the markets are in agreement with each other. Okay, in that kind of situations, usually have a higher probability trade. You saw it last week, you saw it 2 weeks ago. Our hit rate has been pretty high because we use a lot of this correlation, right? If you didn't use correlation, that is where things get a little bit messier, because if the markets are not lining up, then something is wrong in the market. If you were a Jedi in Star Wars, right, then you say there's a disturbance in the force, right? Basically, that something's not right if the market's not lining up. So far, what I like about it is that DXY dollar index, right, is going down. Euro dollar looks like it's going up, right? And if euro dollar goes up, what must come down? Usually it's dollar franc, right? So this might take me to my next analysis over here. Sorry, I just did euro dollar. We got it right. So dollar index, right? Dollar franc. You can see dollar franc. We're actually this is dollar yen. Where's my dollar franc? Yeah, dollar franc. Where are we in dollar franc? Yeah, so we called for the drop on dollar franc below 93.87, right? We called for the drop below 93.87. Okay. Look at that, 93.87 over here, right? Price dropped very, very nicely. So we actually right on the dot, right? We called the drop very, very nicely, right? I hope you guys got in on this trade, right? I hope you guys got in on this trade. The drop was really perfect, right? The drop was really perfect. Did anyone get in, right? So this was last week. I'm not lying to you guys, right? There's a timestamp from last week, 5th of March. We're calling for the reversal, right? And price really reversed very nicely and dropped, right? You guys should be making a good amount of money, right? If you took this trade, right, and it's reversing nicely. Now, okay, let's take a look at dollar franc. I am still bearish, right? I'm still bearish on dollar franc. I kind of expect it to go down, but the problem is that I don't expect prices to kind of retrace back up here. So that means I need to look for intermediate resistance level, right? I need to look for intermediate resistance level. Crap. I do think this might be a first level for us to look at, right? There's a little bit of overlap over here. No, it wasn't trading advice, dude. Dude, there at the start of my video, I said, it's not everything in this video is not trading advice. It's not investment advice. Please do your own little due diligence. For everyone here, especially John, right? Please go. You can scroll back to this part, disclaimer that is, and I think this webinar is investment, not trading advice. So please do your own little due diligence before you guys trade. It's educational. It's my educational angle, right? When it comes to a market, resistance, support, price might reverse, price might bounce, right? Yeah. So John, right? That's something you need to take note of. Okay. Now we're back here. John's name is actually pretty familiar, right? Were you in our last week webinar, or were you in our webinar previously, right? You seem familiar. So yeah. Anyway, if you guys want to, you guys can scroll and look at all the previous live market analysis over here, right? And of course, review. Oh, okay, yeah, John, you were in my previous webinar, so it's nice to see you back here. Good stuff, right? Good stuff, right? Nice to see you back here, right? So yeah, you can review my previous analysis, right? My current last week's analysis and this week's analysis, all right? So yeah, it has reversed quite a bit. Now let's look at resistance, all right? Let's look at resistance. There could be, right, John? There could be, not it will be, right? Reversal from this level, intermediate resistance at 92.84, right? The reason for here is because we like to try to see things line up. I can see DXY dropping, right? I can see euro dollar bouncing, right? But dollar franc, does not have as much of a potential, right? Compared to euro dollar and dollar franc, right? So what I mean is that, if you look at this, right, we're back here, dollar franc, right? Same percentage price scale. Harsim is asking what pairs do I trade. I trade most of the majors, but when it comes to scalping, you can see over here, right? When it comes to scalping, I do look at the crosses. These are some of the crosses that I look at. I don't look at all the crosses, right? But those that look pretty nice, right, are those over here. Pound, Euro, Aussie, Kiwi crosses. We got some of the yen crosses too. I mean, the yen crosses are put in there, right? But yeah, these are some of the instruments I look at, right? I don't really look at too exotic stuff like dollar ZAR and stuff, right? But yes, these are some of it. Look at now. What I mean by that, look at this, right? Euro dollar and dollar franc, they tend to move have a negative correlation with each other, not perfectly negative. So to do that, to get a better gauge, you can actually add this indicator called correlation coefficient. Okay, and when you add it, they're gonna ask you, yo, what symbol do you want, right? So I'm gonna throw on dollar franc over here, and we apply. So you can see the correlation coefficient. Okay, it's not the correlation. Did I throw on the correct one? Dollar franc. Yeah, so you notice most of the time, okay, this correlation coefficient is slightly different, right? But most of the time, you notice that it is close to -1. So a -1 correlation means that the market moves in almost exact opposite directions. Okay, yeah, the market moves in almost exact opposite direction. Oh, I can't hide it, right? In almost exact opposite directions, but sometimes it doesn't. Sometimes it deviates from it a bit, right? But currently, it is still pretty negatively correlated. Okay, definitely worth looking at. Okay, now let's go back, right? We're looking at dollar franc, right? So you notice you compare dollar franc with dollar franc, right? You have a perfect one positive correlation because they move exactly in tandem. Okay, now back at this. Yeah, dollar franc, still kind of expecting prices to go down, right? Throw on my magic cloud, right? Magic cloud, not everyone likes a magic cloud, but yeah, throw on my magic cloud, right? A little bit, price has been a little bit choppy, but yeah, it's a nice bit of resistance over here, right? Oh, Harsim, yeah, I did answer the that at the start of the webinar. So you can scroll back a bit, right? I was touching a little bit on the SVB debacle, right? I wouldn't really compare it that much to Silvergate, but basically, right? Basically, I think they invested in a whole bunch. In a nutshell, they invested in a whole bunch of debt securities, right? Which are supposed to mature, right? People got kind of shook up, right? Tried to withdraw, right? And of course, if you have money locked up in debt securities, right, and people want to withdraw, you need to get rid of it, right? And they kind of so-called redeem it at a loss, right? And that not just any loss, but a huge loss, right? Because if you redeem your debt securities before full maturity, yeah, you get a heavy penalty for that, right? And of course, people are losing confidence in it, and that was where the bank run happened. And you know how dangerous bank runs can be. And in SVB case, yeah, that's basically what happened. All right, so this week, I expect a lot of news items to be surround the SVB debacle. All right, although how it's going to affect the markets, I'm not too sure yet. I'm not too sure how it's going to affect the markets yet. Dollar yen, right? So I noticed someone asked a question on dollar yen previously. Negative correlation with yen dollar, right? All right, negative. I think you meant dollar yen, not yen dollar. Right, but they are pretty similar. Dollar yen and dollar franc are pretty similar, right? We called for a reversal on dollar yen. It has. I kind of expected it to reverse off here, but it seems to be reversing slightly before, right? So I'm still a little bit suspicious about it. All right, I'm still a little bit suspicious about it. In fact, this week, not too sure. This week, I mean, technically, it should continue to go down, right? Last week, we forecasted dollar yen. Yeah, I think we forecasted a little bit of bearishness on dollar yen to reverse from here. But it has tested 38%. It has reversed from there instead. But yeah, I kind of expect it, right, to rise to 139.45 or 138 area first, all right? A Nasdaq, I'll take a look at Nasdaq in a bit, all right? And Timo, right? I'm glad you found the correlation indicator useful, right? I find it very useful myself, right? I always use it to kind of check, like, especially when I'm doing Aussie dollar, right? Then I also need to kind of look at Kiwi dollar, right? So it's because of the positive correlation there, right? I think John did highlight head and shoulders reversal 2 weeks ago, right? So it kind of worked out pretty nicely and beyond that, right? So we were forecasting Aussie dollar. Let's see, not here. This is Kiwi dollar. Shucks, where's my Aussie dollar? Yeah, Aussie dollar. Aussie dollar, we expected prices to kind of continue dropping towards the 6614 level, right? 6614 level. It has dropped to the 6614 level. I mean, this area over here. So I think we were forecasting, yeah, it to be. Why did I pick Elliott wave instead? Where's my arrow? Yeah, we were forecasting it for it to kind of drop since 2 weeks ago. So it has dropped pretty nicely, right? Kind of hit the target, the support target over here. Now, what I expect of Aussie dollar. What I expect of Aussie dollar kind of really matters on what I expect on Kiwi dollar. Okay, Kiwi dollar has a clearer move for me, right? Between Aussie dollar and Kiwi dollar, right? Kiwi dollar has the clearer move for me, right? It's a very nice movement here, very nice. It kind of looks like a double top kind of movement, right? And this would be the neckline, right? This would be the key 38% retracement, 38% retracement from here to here, right? So yeah, nice key 38% retracement that price failed to break, bounce, and kind of broke already, right? So it's making a pullback, right? So there's a possibility, right, that price kind of drop from here towards like the first support. The exit potential, right? The exit potential of a double top traditionally is the 100% projection. So it's down here, okay? So the exit potential of a double top is usually the distance from the head to the bottom, right? Then you project it downwards from the exit, right? So it could actually go a lot lower, right? But in terms of how low I think it can go, I think a safe amount for it to potentially reverse from, it could be down to the 61.8% retracement over here. Okay, that is the first level I'm going to look at. So let's just add on. Do we have that indicator? No, we don't have an indicator there. We use our correlation. Correlation coefficient. We look at Aussie dollar. Okay, I'll be doing Nasdaq and gold pretty soon. All right, I'm going to close off RSI first, right? So yeah, you can see it's almost a very strong one correlation, at least above 0.9. Right, I'm going to increase this over here. This most of the time is pretty close to 1. I mean, seems like at the beginning of the year deviated a bit, but most of the time the correlation between Aussie dollar and Kiwi dollar are pretty close, very, very strong. Right, so if you're expecting a drop on Kiwi dollar, we should naturally kind of expect a drop on Aussie dollar. All right, so that in this kind of circumstances, then I would kind of look at this and I'll be like, there is this bounce. Let me go back weekly chart. Am I missing something? Look at this. From a technical perspective, there's really no support. Besides this 61.8 retracement, there's no support, right? In this case, right, I guess, all right, man, give me a while. Okay, I'll call it a little bit of a risk event, right? I mean that the stars are not lining up that nicely. I would really like it. I would really like it if Aussie dollar had broke this 61.8 retracement, right? Then we have a little bit more confidence that it will drop down to the second support over here. Even then, the second support ain't that great. Okay, the second support ain't that great. It's a 78.6 retracement, right? Kind of clutching at straws over here to find what support level there is on Aussie dollar, right? It's kind of free fall mode, right? It's looking at a couple of retracements, maybe one more support level down here, but they aren't as nice as like Kiwi dollar, where you can see, it's a very strong overlap resistance, pullback resistance, double top, reversal, 38% exit, right? So a lot of it lining up over here, and I'm not sure how would the Ichimoku do, right? It has crossed below the Ichimoku too, right? So basically it adds a little bit more bearish momentum to the trade. And yes, price has been a little bit descending. So overall bearish trend. If you have to pick between both, right? I have a natural inclination, towards Kiwi dollar as a slightly more the setup with slightly more clarity this week. Okay, dollar CAD. All right, just gonna look at dollar CAD. So what we forecasted for dollar CAD, right? Let's just jump here. Oh, should I look at what we forecasted for dollar CAD? Just let me look at dollar CAD, then we look at pound dollar. Okay, real quick. I don't think we had too much to update on dollar CAD. Oh man, where's my? I'm so sorry. I'm wasting your time here. But okay, dollar CAD basically, we forecasted the breakout, we forecasted a squeeze. It needed to break out from here to rise up to here. It has broke out of here, so there's that nice little bit of bullish momentum. Look at the Ichimoku cloud; it's kind of crap, right? On the weekly time frame, it might be slightly better. Still have the little bit of bullish momentum, but on the daily time frame, the Ichimoku cloud isn't going to give you any much information, right? What is more important here? So always, if it's not clear, I'm going to remove it, right? But on the weekly. On the daily time frame, this is definitely a key support level that is broken out. This, when it broke from here, right, we did suggest that there's going to be a change in momentum. It broke this level. It finally reached this resistance target that we looked at. It has broken that level. So I have a slight little bias. I wanted to combine the word bias and like bullish, so it become buyish, right? Right. I got a slight little bias that we could see prices kind of run up to there. Kevin saying it's like a double bottom. Now the problem with double bottom like this, right? The problem with double bottom is that actually what matters previously is the preceding move. Okay. So for example, if your preceding move is this big, and then you got a double bottom like this, it is okay, right? This is okay, right? But if your preceding move is like this, and this is your double bottom, right? This is not good because your preceding move is too small over here, right? So it's theoretically not considered a double bottom, because that means the double, it's like, you must think about it like a human, right? The human, they got the hands, they got the bottom, they got the legs. So it's like if you call a head and shoulders reversal, right? So if you call it like a head and shoulders reversal, right, it actually matters how big the person's body is, right? It actually matters how big the person's body is. You can't call a head and shoulders reversal if the person's body is like this, then this guy, is not that proportionate. Okay, so you do need to factor in the preceding move before it. Right, so like any head and shoulders, like any topish pattern, you need to look what is the move before it. Okay, Kelvin. All right. Pastor Samuel Brown rather. All right. I don't think we look at those charts over here. All right. So, I don't think you look at any of those charts here. So it might be the wrong place. All right. All right. No worries, Kelvin. All right. But dollar CAD, I have a slightly bias that you might see a little bit of touch here and then rise up to this resistance. Okay, we're gonna take a quick look at pound dollar. Right, pound dollar. What was the view on pound dollar actually? I was thinking, so we highlighted pound dollar, right? This 1918 as a key support level, which needs to be broken to drop to 1630, right? Where's the 1918? This level. It seems like price failed to break that level, right? So it's continued to hold above that. Now this Kelvin might be a double top kind of potential, right? So you notice that there's a nice little preceding move before it, right? And there's a nice little kind of topish pattern over here. So price might reverse from here. If it breaks, you can expect it to go down. Not only to a 38%, you can even expect it to go further down. Now, the slight tricky thing over here is that euro dollar and pound dollar tend to be quite correlated. So if euro dollar is going to bounce, pound dollar might see a little bit of a bounce too. Okay, so that's the only thing. I don't, and if you're really expecting DXY to drop, means that the dollar weakness might push pound to go even higher, right? So I'm not the best setup for me, but if the key thing is that if price really breaks this this little double top kind of neckline, you can see prices drop not only to the 38% retracement, maybe all the way to even the 50% retracement. Okay, so I'm really kind of just looking at that level. The pound dollar. Okay, well, we're going to take a look at gold. Right. So for gold, what I think what we're looking at last week, was this my view last week? Yeah, so we highlighted the support level at 1786 to 1805, right? With the resistance level slightly 1867 or something, right? So it went down, it tested our support level again, and it continued to bounce up. So I like this because it shows us that we got the support level right for price to kind of bounce off it so nicely. Okay, resistance level continues to remain at 50%, right? Support level continue to remain over here, right? So why I like this support level, right? Nice little bounce, nice little reaction, nice little reaction, nice little bounce, nice little bounce, right? So this support area over here is called overlap support, right? It is our key area. This resistance is a little bit harder to see, but what you notice is that a lot of times price actually reacted close or above or around this level. Okay, so this to me is a key resistance level, and it lines up with a 50% retracement from here down to here. Okay, it lines up a nice little 50% retracement over there. So we could very well see prices come up the test. And in fact, this with how much sorry, my throat is kind of killing me. Right, with how much the market has been shook recently, right, we could see price rise up to this 1884 level, right? Gold is considered a safe haven asset, right? If all else fails, if all the banks fail, right, if all the banks collapse, then naturally, right, people want to flock to gold as the ultimate safe haven asset. So because of what what has kind of shook out the markets a bit, we could expect gold to kind of strengthen a bit. It needs to break this level, guys, right? If it breaks this level, right, there's a decent chance that it might kind of rise up to here. So I won't necessarily look to play the reversal from here, right? Not really. Not really, right? I slightly personal bullish bias here, right? But I would require this first resistance to be broken to kind of trigger the move up to this second resistance over here, right? Because I do think the market is a little bit shaken, right? I mean, not all banks operate as with the same model as SVB, right? The Silicon Valley Bank, right? I mean, a lot of them have a lot more that is insured, right? I think Silicon Valley Bank had super little that was insured. So clients should not feel that worried about it, right? So yeah, I think it's a little bit tricky, but yeah, I think my bias is that watch for this resistance level. If it's broken, it could give a little bit the push that we need to go all the way up there. We're going to take a look at quick oil, right? So we were right in forecasting that it's nicely ascending support. Price was between these two levels, right? It continued to remain between these two levels, right? So where is it? Yeah, so I mean, we're analyzing Brent crude oil, right? We could just as easily use WTI. So we highlighted that the price will kind of fluctuate between these two levels over here. It has continued to fluctuate, but yeah, it requires a break of this level to trigger a move up. All right, price has not broken that level, so we don't look at the move up. So that's a key thing when you highlight your resistance and your support levels well, right? If you highlight your resistance and support levels well, then it becomes very clear when the market is in neutral, right? You can see price respects our resistance and support levels very well, right? So again, kind of requires you to break this level before you can trigger a move up. Okay, let me see. The Ichimoku cloud ain't that great over here, so I'm not going to look at it. Okay, Yeah, so that's on WTI, right? We're gonna look at S&P, we're gonna look at Dow Jones, we're gonna look at Nas. You know what? Because of the request on Nasdaq, let me just take a look at Nasdaq. Okay, I believe someone did request for me to look at Nasdaq last week. I think. No, I don't think we looked at Nasdaq last week. Did we? The pound yen, Kiwi yen, franc yen. No, we didn't look at Nasdaq last week. Yeah, we didn't look at Nasdaq last week. So I might as well look at Nasdaq now. Okay, let's look at Nasdaq. It's a little bit hard to see, guys, but this is what I love to do, right? Before I look at any chart, zoom out on the higher time frames, look at what I call the overlap resistance, right? Where is the key level of resistance? I think it might be here. Let me zoom in a bit. Yeah, it's more here. This is the level of resistance. Now you, what I like about this live analysis, guys, is that you can actually look at the markets with me, right? Look at how I pick these levels, right? You can see when you pick it correctly, you notice that price, the level, this overlap resistance, right, happens to be a level where price tends to just kind of do little reactions from, right? So it's always in agreement with it, right? It's always a bounce, right? It's always a reaction, a bounce, right? So it's really nice what I call overlap resistance, right? Price tends to respect this level very nicely. So let's just see over here, right? So I do think I like this resistance over here. This will be my first resistance. Price has been Ichimoku looks like terrible. Weekly time frame is worth noting that yes, nice little bit of bearishness. Weekly time frame, right? You can see prices continue to like go lower, go lower, go lower, go lower, go lower. A little bit sus over here, but yeah, it's definitely we're looking definitely at bearish trend on Nasdaq. Okay, right? In terms of the first resistance, then second resistance over here, right? Nice little what I call multi double swing high kind of resistance. Right, so actually it's just two resistance levels. You can stretch it back to be an overlap. You can stretch it back to be an even better overlap. You notice how nicely price responds to these levels. Okay, right, in terms of the support, right, I'm just looking. There isn't any nice support except all the way down here as the key support level. Okay, so the support level down here, right, slight little bearish bias that price could potentially drop all the way to this support level. Okay. Yeah, this is the level which I'm looking at, right? But yeah, really quick look on Nasdaq, a little bit more bearish bias, expecting price to drop for the rest of the week, even maybe for the rest of the month. Okay, right? CAD yen, okay, CAD yen, Aussie franc. I'll do it if I can, right? Let me see if there's no nice levels on the DAX, right? This resistance that I've been highlighting for the past week, continues to remain there. Dow Jones, right? Anyone looking at Dow Jones, right? I did highlight this level. Really nice double top. We could be seeing, if price managed to break this level, a nice drop. Okay. So yeah, the S&P 500, the Nasdaq, the US 500, all of it has broken key levels, right? So if you know how to line things up in correlation, right, you can see this level, this little ascending support has been broken. Resistance level over here, right? Just like we expect on Nasdaq, we could expect a drop on S&P 500 towards this first support over here. Okay, levels are lining up pretty nicely. Bearish trend, right? The Ichimoku looks like crap as usual, right? But yeah, we could expect a drop on the across the major US indices. Now, why I do want to say, from a fundamental perspective, that we might be expecting bearishness across, from not only from a technical perspective, but from a fundamental perspective, for a lot of these S&P, the US indices, right? Why I'm slightly bearish is because of what happened with the Silicon Valley Bank, right? Silicon Valley Bank is more like a venture, a lot of venture-backed companies put their money with Silicon Valley Bank, right? So I mean, not all of them will be in the S&P 500, but you know how they are all related, right? Some of these companies in the S&P 500, right, might have, they're huge companies, they might have invested in many of these other companies, up and rising companies in Silicon Valley, right? One way or another, they might have certain kind of exposure there, right? How big the exposure, we're not sure. But because of this, right, because of what happened, Silicon Valley Bank closing down, right, a lot of these startups in the Silicon Valley space, in the startup space, right, could really, could really be hit hard, right, and that could have a knock-on effect. With the companies in the U.S. Major indices like the S&P 500, the Dow Jones, Nasdaq, all right. Oh yeah, we got Seal A, right? Yeah, David, it's gonna be crazy this week. It's gonna be very fun, right? So please trade with caution, right? We got Seal A saying that for pound dollar, right? Fundamentally, right, the Bank of England already signaling a weakening of pound against the USD, right? So yeah, it could really just take off, right? Right. Yeah, and pound against. I mean, you really need to watch this level. You need to watch this level first. Okay. Let's see. We are going down from the top. We got a request for Aussie franc and CAD yen. Aussie franc, CAD yen. Okay. Let me just come down here. Aussie franc. Oh shoots, man! What happened with Aussie franc? Okay, Aussie franc. Wow. I can't analyze Aussie franc. It's a little bit too, yeah, things were a little bit too whack. Aussie franc. Little bit messy, right? I mean, if I look at it on the weekly chart, even then there's, it's a little bit of free fall. It's a little bit hard for me to call this move. It's in free fall. I can't analyze Aussie franc, right? But I could analyze CAD yen. CAD yen did I look at gold, right? Yeah, I did look at gold for you guys, right? A super important one to look at. Yes, okay, I did look at gold for you guys. Look at CAD yen over here. Right, guys, you have requests, please send it through. I'll do my best to get to them. Where's my CAD yen? I'm pretty sure I had CAD yen lying somewhere. Okay, let's take a look at CAD yen. Always go one time frame higher, see if I'm missing out on any key levels. Let me see. Okay, I guess you can. I do like the support level kind of. I'm gonna highlight it as an area. I do like the support level over here. Okay, I do like the support level over here. Let's see. Okay, I do like the support level over here. It's a nice little bit of support that's over here. So as with most analysis, I kind of always jump, right? I always look at a higher time frame first, see if there's any key thing which I'm missing out on, right? So it's always important to look at the higher time frame. Okay, nice ascending support, nice thing over here, nice thing over there. Ichimoku cloud seems to be breaking it a bit. All right, but yeah, if you join me in today's session later today, right? We'll dive a lot deeper into doing multi-time frame and like the 4-hour, 1-hour charts, right? But okay, this will be my resistance, right? At least this is all I can look at from CAD yen's perspective. You can then jump down one time frame, right? You can then just jump down one time frame. Yeah, you can then just jump down one time frame here, right? It's a little bit harder. Okay, let's go down one time frame over here. Okay, on the daily time frame, it's not clear. There's one thing I can definitely tell you guys. Yeah, on the daily time frame, it's not clear at all. Yeah, it's slightly clear on the weekly time frame, right? It's slightly clear on the weekly time frame. Just let me check something. I need to reply some of you guys in the chat, right? Okay. Now let's go on to here, right? I think I covered most. Oh yes, sorry. The call of the week, right? The call of the week, which I want to tell you guys, right? Right. I think it's like the nicest kind of setup for the week, right? Yeah, nicest kind of setup for the week. Is Bitcoin, right over here. All right, so I just need to monitor the questions that are coming through. Yeah, Bitcoin. So what I like about Bitcoin, I'm just gonna highlight it to you guys over here, right? I don't think you saw it last week, right? But if you go to the IC markets weekly, the daily analysis, you should see it over there. But what is nice is that we call it reversal on Bitcoin from here down to here. But if you look very closely, right, it's a nice little kind of double top kind of formation over here. Okay. Yeah, nice little double top kind of formation over here, and this level kind of lines up very nicely with the 38% retracement, I think. Yeah, 38% retracement. Now that this level has broken, right, this 38% retracement has broken, right, it looks like there's a nice little double top kind of formation. Price has not ran away too far from us, you know, kind of has made a pullback. This could be a decent level, right? It could be a decent level, right, where price, there we go, yep, 30%. It could be a decent level where price might come and test a bit, right? And from here, right, this is where price might drop very nicely, right? How low can it go, right? I wouldn't say it comes all the way down here, although this is like the major support level, right? This is the major support level, right? But it could, yeah, it could come all the way down to here. Okay, it could come all the way down to here. All right, so there's a decent chance that price might reverse from this area towards this overlap, right? This overlap, I believe, is a 61.8 retracement. So it has broken the 38%. Oops, not even a 61. Sorry, it could be. Is it? No, it can't be a 78. 78 is lower. All right, so yeah, it broke the 38%. It might reverse to a 61, which is slightly higher, but in terms of overall overlap support levels, right? This overlap support here is very nice, right? So I'm really liking the setup on Bitcoin over here. Okay, so this is my first resistance over here, right? Potential reversal, right? A double top reversal on Bitcoin all the way down here. Okay. Okay, guys, right? I think that's it from me, right? The non-farm payroll, right? I saw a question from non-farm payroll. I think there was an increase of 311,000, right? Where is it? From last week. This will kind of require you to like jump to last week. There we go. I think. Oh yeah, 311,000, right? It's a nice little jump, right? From last week, right? Non-farm payroll. Let's just see over here. All right, where's my questions? I need to see my questions come through, right? Don't have much to share about it, right? You can yeah, don't have much to share about non-farm payroll, right? I think the key news items that we are focusing on this week is over here, right? So one of the things that you guys can do, right, is that if you miss any part of the analysis, like if you miss if you miss the start of my analysis, right, you can actually scroll back, right? You can actually scroll back and you can see like the parts on the fundamentals which you covered at the start of the webinar. You can actually scroll back and listen to it. So just because you missed it doesn't mean it's gone. You can just do a quick recap on it. All right, nice to see you guys. If please do me a favor, right, if you can, right, help me smash that thumbs up button, right? It really helps us with the YouTube algorithm, right? Yeah, YouTube algorithm help us rank slightly better, right? Yeah, so if you can, right, please do me a favor, help me. And if you found that this webinar, this session has benefited you in any way, please give a thumbs up, right? I will see you guys in 12 hours and I'll see you guys in 1 week, right, for our weekly market analysis, right? So pre-market analysis, Same time, same place. You will see me, right? Literally 1 week from now. Okay. Thank you, Paul. Thank you, Kanemba. Nice to see you guys here, right? Kanemba, I didn't see you send a message earlier, right? Thank you, Moss. All right. Thank you, Seal. Hey, yes, the market is open. Let's start rock and roll, right? Kelvin, nice to see you. Yeah, sorry. I mean, thanks for tuning in. Right, I'll see you guys in 12 hours live trading session. We start looking at the 4 hours and the 1 hour charts a lot more. I'll have a lot more time to take on your requests, right? So do tune in for to the live market analysis session later. Later this what's the word for it? Later today. Okay. Thank you, Marondera. Thank you, David. Right, awesome session. Right, we'll review. Right, we'll review what the setups again that we called last week. But in the live trading session. Later today, you will see me break down from the 1 day kind of structure that we have, D1 time frame, how we can go down to the 4 hour and the 1 hour time frame. Okay, no worries, Kanemba. All right, all good stuff. Thank you guys for tuning in, for staying with me throughout. Right, it'll be a nice week this week. Remember, tune in to IC Markets daily technical and fundamental analysis. Right, we're updating it every week, even with the central bank notes. So keep an eye on that, right? Very, very useful. Even more useful this week when there's so much happening. Right, Precious, nice to see you. Thank you for tuning in. Right, it has been a fun time with you guys. Right, of course, yeah, it's been a fun time with you guys. Right, thank you from IC Markets. Stay safe, trade safe. Right, thank you, Leandro. Right, I'll catch you guys in 12 hours. Right, so do tune in, and it'd be nice to see you guys there. Okay, cheers and peace out, everyone.